Are you a business owner who needs capital but keeps hearing no from banks? Or maybe you're confused about how business funding actually works. In this video, I'm going to break down exactly how business funding works, what lenders are really looking for, and how businesses are getting 25,000, 50,000, even 500,000 or more in capital. If you're a startup, contractor, restaurant owner, trucking company, or any small business, this video will help you understand the real approval process. And make sure you watch until the end because I'll explain how you can position your business to get approved faster. My name is Demetrius Harris, and I help business owners access funding for their companies. Every day I talk to entrepreneurs who need capital for things like hiring employees, buying equipment, covering payroll, expanding locations, managing cash flow. But the problem is most business owners don't understand how funding actually works. Today, I'm going to simplify the entire process. Businesses need funding for growth and stability. Common reasons businesses seek funding include equipment purchases, inventory, payroll, marketing, expansion, emergency cash flow. Even profitable businesses sometimes need capital to scale faster. Funding isn't just about survival, it's about growth and leverage. The five things lenders look at. When lenders review a business for funding, they typically look at five major factors. Time in business. Most lenders want to see 6 months to 2 years operation. Monthly revenue. Revenue shows lenders that your business has cash flow to support funding. Credit profile. Some lenders check personal credit, but many programs focus more on business performance. Industry risk. Certain businesses are considered lower risk. Bank activity, consistent deposits show that business is active and stable. These factors determine how much funding you qualify for. Now, the type of business funding. There are several types of funding available to business owners. Term loans, traditional funding paid back over time, business line of credit, flexible access to capital when needed, revenue-based funding, approval based primarily on business revenue, equipment financing, used for trucks, machines, or tools, SBA loans, government-backed programs with strict requirements. Each funding option serves a different purpose. Why banks reject businesses? Many banks owners apply at banks and get denied. Here's why that happens. Strict credit requirements, loan approval timelines, complex paperwork, high collateral requirements. Banks are designed for low-risk lending, but many alternative lenders focus on business performance instead of perfect credit. Now, how modern business funding works. Today, business funding has evolved. Instead of going to just one bank, funding brokers connect businesses with multiple lenders and programs. This increases the chance of approvals because different lenders have different requirements. Some focus on revenue, some focus on credit, some focus on industry. The goal is matching the right business with the right lender. Now, how to position your business for approval? If you're a business owner preparing for funding, here are some tips. Keep business bank deposit consistent. Avoid overdraft. Maintain organized financial records. Build business credit over time. Apply when revenue is stable. When these things are in place, approval becomes much easier. If you're a business owner watching this and you need funding for your company, there are programs available right now. Many businesses qualify for $20,000, $25,000 to $500,000 or more, depending on revenue and business profile. If you'd like to see what your business qualifies for, you can apply using the link below. If you found this video helpful, make sure you like the video, subscribe to the channel, hit the notification bell. I share weekly content explaining how business funding works for different industries. If you have questions about funding, comment funding below. Thanks for watching, and I'll see you in the next video.